Daily Global Business and Financial News Update July 24, 2026. Based on the latest major reports published by the Financial Times, here are the most important developments affecting global markets, economies, and investors. Here are 8 topics that we are going to talk about. 1. Oil rises above $100 amid escalating Middle East tensions. 2. Rising oil prices trigger a global bond market sell-off. 3. United States imposes new tariffs on 60 countries. 4. European Central Bank keeps interest rates at 2.25%. 5. Intel reports its fastest revenue growth in 15 years. 6. AI infrastructure projects face higher financing costs. 7. India faces widespread student protests over examination leaks. 8. Global ETF launches reach record levels. And last, market outlook. 1. Oil rises above $100 amid escalating Middle East tensions. Brent crude moved above $100 per barrel after attacks on Saudi oil tankers increased fears of disruption around the Bab el-Mandeb shipping route. The escalation involving the United States, Iran, and Iran-backed Houthi forces has raised concerns about global energy supplies and a wider regional conflict. 2. Rising oil prices trigger a global bond market sell-off. The energy price surge has renewed inflation concerns and pushed government borrowing costs sharply higher. U.S. Treasury yields reached an 18-month high, while German and French bond yields climbed to levels not seen for more than a decade. Investors are becoming increasingly concerned that central banks may need to keep interest rates higher for longer. 3. United States imposes new tariffs on 60 countries. The U.S. administration announced tariffs of at least 10% on imports from approximately 60 countries, including major trading partners in Europe and Asia. The measures were introduced under forced labor enforcement rules after earlier tariffs faced legal challenges. The policy may increase global trade tensions and raise costs for companies and consumers. 4. European Central Bank keeps interest rates at 2.25%. The European Central Bank held its benchmark interest rate unchanged after discussing whether another increase might be necessary. Policymakers are monitoring the inflationary impact of oil prices above $100, with further rate increases remaining possible if energy costs continue rising. 5. Intel reports its fastest revenue growth in 15 years. Intel reported a 25% year-on-year increase in quarterly revenue to approximately $16.1 billion. The chipmaker also plans to raise capital expenditure to around $20 billion as demand for artificial intelligence infrastructure and advanced semiconductor manufacturing continues to expand. 6. AI infrastructure projects face higher financing costs. Meta is reportedly facing increased borrowing costs for a major $12 billion artificial intelligence data center project. The development suggests that investors are demanding higher returns as debt yields rise and concerns grow about the large amounts of capital being invested in AI infrastructure. 7. India faces widespread student protests over examination leaks. Large student demonstrations have taken place in India following repeated leaks of examination papers. Protesters are demanding stronger accountability and reforms, while Prime Minister Narendra Modi has promised new legal measures to protect the integrity of the education system. 8. Global ETF launches reach record levels. Investment companies have reportedly launched around 1,000 exchange-traded funds so far this year. The rapid expansion reflects strong demand for low-cost investment products covering equities, bonds, commodities, cryptocurrencies, and specialized market themes. Market outlook. The global market environment remains highly sensitive to energy prices, inflation, and geopolitical tensions. For oil, prices may remain elevated if shipping routes or Middle Eastern supply are disrupted. For bonds, yields could continue rising as investors expect tighter monetary policy. For stocks, technology and growth shares may face pressure from higher borrowing costs. For gold, safe haven demand may strengthen during periods of geopolitical uncertainty. For crypto, Bitcoin and other digital assets may remain volatile as investors reduce exposure to riskier assets. Warning: this report is for general information only and does not constitute financial advice. Thank you for watching. Kindly please help subscribe, follow, share and comment. On behalf of our team, we wishing you a pleasant day, happiness and prosperity.